Hello everyone, welcome back. In our previous lecture, we have covered leverage measures. In this lecture, we'll cover efficiency measures. In finance, by efficiency, we usually mean how well a firm uses its assets to generate revenue or sales. So, with the help of efficiency ratios, we'll try to answer the question like, are we doing more with less assets? Efficiency ratios are also known as activity ratios, and these ratios capture the firm's ability to effectively use its assets in generating revenue, or in a simple word, how well firm uses its assets to generate sales or revenue. Total asset turnover ratio indicates how efficiently the firm uses its total asset to generate sales. Total asset turnover ratio is equal to sales divided by average total assets. Let's look at the total asset turnover ratio of ABC Incorporations in 2019. So over here, sales of ABC Corporation is $14,580 and average total assets has been calculated by adding 2 years last 2 years asset. That means if it is for 2019 and the first one is the average total asset of 2019 and is the total asset of 2018 divided by 2, and total asset turnover ratio of ABC Incorporation is 0.95. This ratio indicates firm assets are converted into sales by 0.95 times. Inventory turnover and days in inventories ratios are used to measure how quickly the firm converts its inventory into sales and restock itself. So inventory turnover commonly measures the activity or liquidity of firm's inventory. The formula of inventory turnover ratio is equal to cost of goods sold divided by average inventory. It is more meaningful if we convert this ratio into days. We can convert this ratio into in days in inventory, which is equal to 365 divided by inventory turnover. Over here 365 indicates a number of days in a year. So overall, inventory turnover and days in inventory ratio measure how quickly inventory is produced or sold out. Let's look at the inventory turnover ratio and days in inventory of ABC Incorporation. In 2019, ABC Incorporation inventory turnover ratio was 7.53 times. In this ratio, that means the result indicates ABC Incorporation's inventories are converted into are sold and restocked by 7.53 times in a year. And if we convert inventory turnover into days, which will it will be more meaningful. So if we want to convert the inventory turnover into days, we need to uh, divide 365 by inventory turnover. So over here inventory turnover is 7.53 times. So based on this result, inventory turnover of ABC Incorporation is 48 days. It means ABC Incorporation takes 48 days to sell its inventory and restock. However, inventory turnover ratio is only meaningful if it is compared with other similar firms or if the ratio is compared over the time. Firms also sell on credit, and this is why we usually analyze account receivable turnover and average collection period. Account receivable turnover is equal to sales divided by average accounts receivable. However, it is more meaningful if we uh, convert this ratio into days. In the meantime, account receivable turnover should be also assessed in comparison with similar firms. Average collection period converts the inventory turnover into days. So average collection period is equal to 365 divided by account receivable turnover. Let's look at the account receivable turnover and average collection period of ABC incorporations. So we know that account receivable turnover is equal to sales divided by average accounts receivable. So based on this formula, account receivable turnover of ABC Incorporation is 10.80. Now, with the help of account receivable turnover, we will convert it in average collection period. So we know that average collection period is equal to 365 divided by account receivable turnover. So based on this formula, account receivable turnover of ABC Corporation is 34 days. It means ABC Corporation on average takes 34 days to collect its account receivable. There is a rule that account receivable turnover in terms of days should not exceed the credit term by more than 10 days. For example, if the credit term is 30 days, account receivable turnover of the firm should not exceed 30 plus 10, which is more than 40 days. Here is a comparison of efficiency ratio between ABC Incorporation and XYZ Incorporation. In terms of total asset turnover, ABC Incorporation is better than XYZ Incorporation in both years. In case of receivable turnover, XYZ Incorporation is better than ABC Corporation. And in the same way, average collection period of XYZ Corporation is better than ABC Corporation because XYZ Corporation takes 21 days in both years to collect its account receivable, whereas ABC Corporation takes 35 days in 2019 and 36 days in 2018 to collect its account receivable. So if we compare, we should suggest that ABC Corporation should take steps to collect its account receivable quicker. Now, if we look at the inventory turnover ratio, if we compare inventory turnover ratio between ABC Incorporation and XYZ Incorporation, we will not find much difference because ratio values are same. In terms of days as well, days in inventory, there is not much difference between ABC Incorporation and XYZ Incorporation. That's all about this lecture. In our next lecture, we will cover liquidity measures.